Hi, this is Randy Finney with Right Side of the Chart, and this is an early session market update for Tuesday, May 28th, 2019. I wanted to follow up with a video. I did make a post in pre-market today sharing my thoughts on the market with some potential bounce targets. So as the trading day is underway, let's just quickly review the charts. I'll share my thoughts here, some levels to watch out for, and potential targets if you are looking to position long this week for a bounce as I am. All right, so let's start out here again. Just a very quick recap. We've had as of Friday, that was the third successful defense of the 178 area. Again, it was a key level. There was the first, second, third. That's Friday's candle. Here we are today, and bigger picture has this falling wedge pattern here in QQQ, RSI divergence. We don't have PPO divergence, but that's fine. That happened back in December there. I believe in the SPY we had RSI divergence only. And again, it's more about the 60-minute charts, which I'll get to in a second. So that's just bigger picture on the daily. Here's, well, I've got different boards here. There it is. SPY has held the 280-ish level. Remember, SPY never even made a full test of the May 13th lows. It's been a little bit stronger. That had to do with a lot of defensive issue buying. So really, come back to QQQ. This is where we're at. This is where my focus is today. As before this whole thing even started, I said I was watching tech. When tech breaks, the market breaks, and then tech did break. Tech is XLK, by the way, the ETF for technology, the tech sector. There it is, beautiful, just nice sell-off right when the trend line broke. It doesn't get any better than that. Right down to a well-defined support target level, about 73. Hit it, bounced, hit it again, bounced. So far, so good. I want to reiterate, as I've said, we are not out of the woods at all. The long-term charts are ugly. So I'm viewing this as picking up nickels in front of a steamroller type bounce if it does materialize, and if it doesn't, I will be far from shocked or surprised. In other words, if we just as it starts to look like we might get a good rally, if they sell into it, take it down, take out last week's lows, break support and go down to the next support level, again based on what's out there on the weekly charts and the recent price action, it wouldn't surprise me, although at this point in time I'm still leaning towards a bounce, and I think it could be pretty decent, a tradable bounce, 2-3%, somewhere in that range most likely. Let's just focus. You can play XLK, but QQQ almost mirrors XLK because it has such a tech heavy weighting. So let's just focus on QQQ. This is just a recap. Here's the bounce targets I laid out this morning. In that post I mentioned this is my uppermost bounce target. In other words, I can see the rally going as high as this. I prefer, if it does get up there, that it doesn't go any higher to keep my longer term bearish scenario healthy and intact. Doesn't mean it's all over if that level's taken out, especially if we run up strong and have a lot of momentum heading up there. I always talk about what I call momentum fueled overshoots. So let's just say this week we see a strong rally today into this week, sometime this week, maybe even overshoot that level, and then come back down and close below it. That would be ideal. So an intraday pop or marginal close above isn't the end of the world. But let's see. First things first, we have to get a bounce. So far, it's really nothing to get excited about. As I said, we're in very close proximity to the recent lows. The market could turn down as I'm doing this video and undercut those lows. So stay nimble. Don't be married to any one scenario what the market must do or is going to do. This is, I feel pretty good on the bounce here. I'm pressing it pretty hard right now. Came into the week long like I said I would, but I didn't go too heavy over the weekend because we had, of course, the 3-day weekend and everything else. But futures held up. They started opening. They opened for trading on Sunday night, even though the stock market didn't open Monday. And futures traded yesterday mostly flat, and again into this morning. So they really held up. The market opened up about where we closed on Friday. So far a little bounce. So here's what we're watching. This sort of wedge type pattern here, this minor downtrend line on the 60-minute chart. And as I'm doing the video, again, these are the same levels laid out this morning in pre-market. We closed down here, and you can see that first 60-minute candle hit a high of 179.66. You can see it in the pop-up box there to the left, versus my first target here, 179.64. Plus the downtrend line is also resistance. So as I'm doing this video, we are at the first level. I expected a reaction. We've got one so far. That's what a reaction is. If we zoom in on a 1 minute chart, that's it. There's the high, there's the pullback. So we're consolidating below that level. By the time I finish this video, I suspect that we'll pop above there, but as I say, resistance is resistance until unless taken out. So if you're adding to positions throughout the day, or let's say you're short, let's say you say, Randy, you know what, I'm sticking with the longer term bearish case. I don't see there's really not any buy signals in the market. I will acknowledge that the trend is certainly bearish right now. So you might be concerned of where to stop out if we're going to pop it and have a strong rally. Well, that's the first level, and that's probably the most important level today. Compared to the other levels above there, because you have the downtrend line and a pretty solid resistance level. You can see all the reactions here along the way. So if we pop that, I expect that we'll run pretty strong, quite possibly blast on through that second target if that's taken out. And then we have what I call a resistance zone. If I label two resistance levels or support levels for that matter in close proximity, it's what I call a resistance level or zone, or resistance zone I should say. So I expect a reaction anywhere around that level. Now you can also see what's interesting. I put up the fibs. That's this line right here. Fibonacci retracements, that's the move down from the highs right here into the lows, and coincidentally or not, some of those key fibs come right in with my my price target resistance levels. There's that first target, or I should say 1, 2, really third target zone. This wouldn't be a target, it's too shallow. This is more of what I would label as R1 or resistance 1, resistance 2, and this being, let's just say T1, T2 for the bounce. And you can see this 38.2 fib comes right in the center of that resistance zone. You got your 50% Fibonacci retracement here, and then my max bounce target on QQQ, SPY, and IWM all align. I made those levels because they're price resistance levels, but they also align perfectly with the 61.8% Fibonacci retracement level. So that's about a little shy of 186 on QQQ there. And again, that's a level where I would look at most likely if we approach that level. Quite likely reversing if I'm still long at that point, assuming this thing even plays out again. I don't want to get ahead of myself here. Quite likely reversing from long back to short for the next leg down. And here's SPY, the S&P 500 tracking ETF. There's your downtrend line to watch. We haven't yet hit it. You can play around with this line a little bit here. Let me move it around, tighten it up right about there. I think that's a good fit. So you can see a downtrend line, not off the highs, close to the highs, but right here. A lot of reactions. But again, same story. Here's where we opened today. Let's zoom in tight. There was yesterday's close, and I had that first resistance at 284.26. But I always say this. If you're trading, and again, I like to trade the Qs or small caps, RTY, IWM, because you get more bang for your buck than the S&P 500. However, whether you're trading one or the other, you want to watch QQQ and SPY together, the large caps, because it's usually when the first of the two hit resistance, that's where you get a reaction. So I already showed you QQQ reversed right on Q. When it hit that first target. SPY fell a little shy, but for all intents and purposes, that's close enough. You see a high of 284.15, on a $284 security price, 10 cents, or what is that, 11 cents. It's, for all intents and purposes, that's a tag of the resistance. So same story here. Let's just keep it pretty simple. The markets need to pop that level, take it out with conviction, and take out the downtrend line as well. And then you can see targets here with my max bounce target on SPY about 289. If we do get the bounce today, if it comes and we build on today's gains, we'll see how this goes. I may almost certainly lighten up exposure if and when the second target is hit. We'll see. I want to see what it looks like if it develops. But I think what will happen if we can pop these levels, the higher we go today or this week, the more stops on shorts you're going to see hit, and you'll see those shorts squeezed out. So I think we can get a pretty swift rally. I guess that's the takeaway from this video, guys. Either we're going to hit these bounce targets. My minimum target again, my minimum target on all these charts I'm sharing here, the 60-minute charts, are the second to highest levels. That's my minimum bounce target, my max bounce target. And if they're hit, I suspect it would be a pretty quick pretty quick movement. Probably happen this week, possibly even today. But again, first things first. Let's just see if we can take out this and keep above the recent lows there. Alrighty, I had to pause it there for a quick phone call. Alright, so that's it. Watch those levels, watch the lows, and then on IWM, finally, we have a similar comparable downtrend line. I can tighten this one up just a little bit. There we go. And my first target posted in pre-market was at 151.08 level. We overshot it, momentum fueled overshoot again. I put a higher weighting on what QQQ and SPY are doing, and so far with a brief momentum fueled overshoot where we've had a reaction there because we're back down below that level. So IWM needs to pop on through there as well as a downtrend line. So all these charts are similar. That's it. You need to see these first resistance levels plus these downtrend lines taken out, and then you can see my minimum bounce target 154.73, give or take, and 156.20. Now I'll say this again: if you're trading IWM, let's just say, and you're targeting, let's say that whatever, let's say you're targeting the 154.73 target. Number one, that's the actual resistance level. I always set my sell limit orders slightly below if that's my target. And the other thing to watch is QQQ and SPY, even if you're trading IWM. And at that time, let's just say IWM was working its way up, heading, looks like it was going to hit it. It was moving up pretty good. But at this point right here, let me grab an arrow tool. Right about here, QQQ and or SPY hit their comparable minimum bounce targets. You might get a reaction there. So you want to watch the other two, SPY and QQQ as well, because if they reverse, because they hit their resistance levels, and the large caps start going down, small caps would likely follow, and in that case you might fall shy of the target. So like I say, I'd never trade in a vacuum. Even if I'm trading one particular index, I'll watch them all, and look for cues that some, if QQQ or SPY hit a resistance level that might cap any rally there. So that's it. Let's see what we do here. Again, the fibs, as I told you, they all align perfectly with my final targets, which are really, the targets themselves were based on price resistance levels that I think are very significant. And then you can see there, that's right at the 61.8 fib, just like the final targets on SPY and QQQ. For those of you not familiar, you can do a quick Google search on Fibonacci retracement levels, but most traders will look for a counter trend move, or at least I do, come anywhere between the 38.2% Fibonacci retracement all the way up to the 61.8. That's a typical counter trend move. Not to say that you can't go higher or reverse shy, and that's the other thing to look for too. If this bounce happens to get some traction today, more than what we've seen so far, and then let's just say hits at some of these minimum targets, and we go on and make an impulsive move down below the lows, that's going to be pretty bearish. It just tells me there's a lot of trapped sellers, a lot of trapped longs just dying to get out of this market on any bounce, and it tells me that the supply demand dynamics right now are not healthy for the market. And it also tells me, those longer term bearish developments on the weekly charts, they're going to continue to firm up if this market makes a not just a brief undercut, but a break below the lows down to those next swing targets that I have on the daily charts. That would be pretty bearish, and again, only further here. Let me show you what I'm talking about here. QQQ, jump over to weekly chart. There it is. There's the PPO starting to cross over. Sometimes you'll get a bearish cross, the lines kiss, and then you bounce, but that looks ugly. That's about as ugly as a weekly chart looks to me. If we get another red candle this week, You do have the 200-day and quite a bit of support below. I'm going to say this now before I wrap this video up. Yes, the charts are ugly. Yes, I think we go lower in the coming weeks, but the risk reward for shorting at this point, adding new shorts until we have a decent bounce or consolidation to work off the near-term overbought conditions or burn through these divergences, it's just not very attractive right now. It was much more attractive back here. This was the most objective level to short. At this point in time, like I said, I could easily see, a brief undercut, wash out a lot of the stops, and then turn around. And doing so would still keep the divergences intact for now on the 60-minute time frame. So let's just keep an eye on things. I'll certainly do another update today, no later than the end of the day, and we'll go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.